Hello guys, this is Dom Effects here. Welcome back to another review. Today is Monday. Had to run a couple errands yesterday, so wasn't able to do my live. However, doing it today. So we've got to see, does it want to respect this for now? Take out these equal highs, fill this liquidity void. That would be the ideal scenario at this moment in time, because this Asian session currently is, there for the taking. Always, if it's gonna go in one direction, it will take out the Asia session on the opposite session, or on the opposite direction. Before going in this intended direction, it's went to one standard deviation, so potentially up to one standard deviation, and then continue lower from there past this. But yeah, we are expecting price to come up into there originally, potentially by the green area, so potentially going to be a day of bullishness, and then here we'll potentially see the reversal. So normally it would be a high within the orange section, come up into optimal trade entry. This optimal trade entry is going to be of this swing, and reason it's going to take, it's most likely going to wick the highs and then come back lower, as a taking out opposing liquidity to then continue lower. So that's the potential entry I see. Once it starts reversing, potentially going to look for these lows. Just got to wait until price takes out that. So for here in euro, what that would look like is price taking these equal lows into there before continuing higher. Let's look at pound dollar. Has went into this survey gap, respected this. This just looks a bit more techy. You can see that pound is just stuck more in that range. It's just the fact that there's nothing there. So it's harder to say where it's going to go down to, but that's fine. We'll just focus on euro dollar. It looks like the easier pair to analyze at this moment in time. So we've got that out the way. Let's check the higher time frames to see why I have that particular thingy in mind. So let's go adding the trend line for that. So yeah, doesn't look too bad. It just looks like it's going to come to the rejection block here and then start moving lower. That does seem like the possibility here at this moment in time. Once it goes there, it has to respect this rejection block and start making its way lower. There is no fair value gaps here, so the only thing it can really take is this low or this low, come back into this what we used as an inverted fair value gap going forward. Now that it's used it for the bullish side, potentially may use it for the sell side, but it's just too far out here. Rejected the mean threshold of the order block, potentially going lower. There's a fair value gap here, so we may see this used as an inverted fair value gap at some point down the line. So this week takes it up down into there, next week comes back up, potentially respecting the order block and then continuing lower. And that's what we're expecting for dollar, so we'll expect the opposite in euro dollar. So you can see euro dollar on the weekly, it went into this fair value gap. Let's look at where this will be easier. Use that because that's the lowest price, so use that on the daily. Pretty much, yeah, it's pretty much coming to the constant encroachment of the wick, the 0.75 level, and then continuing higher. That makes sense. So essentially coming above here, come back into this order block, and then next week come lower, use this as an inverted fair value gap, this liquidity void, but liquidity voids and fair value gaps are pretty much similar, like they act similar, so use it as inverted fair value gap and then start to make its way higher past the highs and then continue higher. So that's our prediction for dollar and euro. Let's do a bit of indices. So S&P on the monthly took it now. Was waiting for it to be taken because this balanced price range, because it created a balanced price range, we're waiting for these to be taken. Now there's a potential chance for it to reverse back into there, but we just got to wait and see because we don't want to predict the top. It's not something we want to do. Here, same thing. Balanced price range went up higher. This broke it, so we're just seeing what it wants to do here. This hasn't broke it. So if the other two starts to come back down, this has the excuse to come back down into there. But yeah, the others look cleaner, while the others look more bullish than the Dow Jones. And that's that for that. Now let's look at a bit of bonds. So the bonds, went higher and then went lower back into the order block. This is the liquidity void. Respected that and starting to go higher. If we're going to see continued bearish movement from dollar, we need this fair value gap to turn into an inverted fair value gap by closing above it. don't really want to see it go further bearish. Here, done the same thing. Here, done the same thing. So yeah, it's looking more bearish. The lower the bond year, so 5-year, looking even more bearish. No, bullish, sorry. Even more bullish. Weakest of them all. So the lower time frame bonds are suggesting there's going to be a start in bullish sentiment. The 30-year bond is just taking its time to continue that way. So we've done a bit of bonds, done indices, done currency. Let's just do gold for why not. So after gold's hit there and come up past here, it's been ranging a bit. So from there, predicted a buy. Here was another good chance. After it cleared that high, started coming back into the range. So it's just been ranging. Used that again, went higher, used that. So it's essentially going to carry on going higher. Just created equal highs to be taking. So that's dollar, gold, bonds, indices, and euro dollar. Makes up a nice steady amount of stuff. So if you guys enjoyed, please leave a like. If you want more of it, subscribe and turn on notifications so you're up to date on when I go live. And yeah, thank you for watching, and peace out.